What if I told you that the single most important financial event of the decade just flashed across the screens of professional Forex traders and was almost missed by the entire world because it was so small, so minute, so seemingly insignificant that if you blinked you would have missed it, but that tiny, almost invisible flicker on a trading chart, that single decimal point shift in a number you've been watching for years, is potentially the first domino to fall in a chain reaction that could rewrite the global economic landscape and alter the financial destiny of millions of people holding the Iraqi dinar. This isn't a drill, this isn't speculation, this is live data that just hit, and the implications are so profound that we need to break down exactly what this means, why this specific movement is different from every single false alarm we've ever seen, and what you absolutely must do right now to position yourself for what could come next. For years, the narrative around the Iraqi dinar has been one of waiting, of patience, of hoping for a revaluation, a moment where the currency's value is officially recognized and adjusted to reflect the true wealth and economic potential of Iraq, a nation sitting on one of the largest oil reserves in the entire world, and in all that time, we have seen nothing but stagnation on the official Forex markets, with the rate seemingly locked in place, creating a sense of hopelessness for many, but today, something fundamentally shifted in the digital ether of the global financial system. The live Forex data feeds, the very same ones used by billion-dollar hedge funds and international banks to execute trillion-dollar trades, registered a legitimate, tradable movement in the Iraqi dinar's pairing, and while the numerical change might look like a rounding error to the untrained eye, to analysts and those who understand how the global currency machine operates, this is the equivalent of a starter's pistol firing, a signal that the long-awaited and heavily debated process may have just transitioned from political rhetoric and central bank planning into tangible, market-driven reality. This specific activity, which we are tracking through multiple independent data sources to confirm its legitimacy, suggests that the Central Bank of Iraq is no longer just talking about monetary reform in press conferences, they are actively engaging with the system in a new way. Think of the global Forex market as a colossal, interconnected nervous system, and each currency is a nerve ending. For years, the Iraqi dinar nerve ending has been largely dormant, firing occasional signals but never with any consistent, integrated rhythm. This movement, however, indicates a test, a deliberate probe by the CBI to see how their currency interacts with this vast network under a slightly different set of parameters. Are they testing liquidity? Are they gauging international market response to a minor adjustment? Are they ensuring their own internal systems can handle the volatility and the arbitrage that comes with a freely traded currency? The evidence points to yes. This is a controlled experiment happening in real time, and the very fact that it is visible to live Forex screens means it is intentional. The CBI knows that every single trade, every single quote, is being scrutinized by algorithms and traders across Tokyo, London, and New York. They did not accidentally allow this movement to occur, this was a calculated decision, a soft launch of a new phase in their monetary policy, and it speaks volumes about their confidence in the underlying stability they have been building away from the spotlight. This isn't about a massive, overnight revaluation. This is about the mechanics of integration, the painstaking process of connecting a historically isolated currency to the mainframe of global finance, and today's event is a critical login attempt that appears to have been successful, a signal that the technical groundwork laid over years of negotiations with the International Monetary Fund and the World Bank is now being activated. The silence from the central bank is deafening and, in this case, incredibly telling. No denials, no statements calling it a glitch, just the quiet hum of a financial system beginning to acknowledge a new reality. And for you, the investor, this is the most critical moment to be informed, not to panic, not to sell, but to understand that the patience you have held for so long may be on the verge of being validated in a way that very few people ever expected to see in their lifetime. The door has just been cracked open, and the light from the other side is now visible. Now, let's pull back the curtain on the real mechanism behind this shift, because understanding that why right now is more valuable than anything else, and that why points directly to a series of silent, tectonic agreements that have been moving beneath the surface of Middle Eastern politics and global economics for months, culminating in this very moment where a simple number on a screen carries the weight of an entire nation's future. The Central Bank of Iraq is not acting in a vacuum. This precise, measurable activity on the Forex screen is the direct and inevitable consequence of Iraq finally achieving a level of financial stability and international compliance that was once thought impossible, a quiet victory over the financial chaos that has plagued the country for decades. Think about the recent and almost total elimination of the dollar black market within Iraq, a monumental achievement by the CBI that strangled the funding for illicit activities and forced all major commercial transactions through the formal, regulated banking system, thereby creating a clean, auditable financial trail that international partners like the United States Treasury and the IMF could finally trust. This wasn't just a local policy, it was a prerequisite, a key that unlocked the door we just saw crack open, proving to the world that Iraq's financial infrastructure is now robust enough to handle the pressures of a convertible currency without collapsing into hyperinflation or rampant corruption. Furthermore, this movement coincides perfectly with the finalization of Iraq's compliance with the international SWIFT messaging system, ensuring that every cross-border transaction is now transparent, traceable, and secure, which effectively removes the veil of secrecy that once allowed for massive money laundering and terrorist financing, thereby erasing one of the biggest red flags that kept the IQD isolated from the major currency pairs. All of this is happening against the backdrop of Iraq's oil industry operating at peak efficiency, with production deals locked in for the next decade, providing a predictable and colossal stream of hard currency revenue that forms an unshakable foundation for the dinar's value, a foundation that is no longer theoretical but is now being actively monetized and integrated into the global economic engine. The timing is also deeply connected to the regional economic integration projects, particularly the new trade corridors and agreements with Saudi Arabia and the UAE, which require a stable and reliable Iraqi currency to facilitate billions of dollars in non-oil trade, moving Iraq from a single resource economy to a diversified, regional trading hub, a transition that is impossible with a weak and volatile currency. What you are witnessing on the Forex screen is the financial market's acknowledgement of this profound structural change. The algorithms are picking up the increased stability, the reduced political risk, and the massive incoming capital flows, and they are recalculating the IQD's risk profile in real time, shifting it from an exotic, untradeable asset into an emerging market currency with tangible potential. This is no longer about hope, it is about mathematics and geopolitics converging on a single point. The market is now factoring in the reality that Iraq possesses the third largest proven oil reserves in the world, a wealth that has been historically disconnected from its currency's value due to security and structural issues, but those issues are now being systematically resolved, and the market is a discounting mechanism. It always looks forward, not backward, and what it sees now is a future where the Iraqi dinar's value is inevitably and irrevocably aligned with the nation's immense natural resource wealth. This tiny move is the market's first, cautious step in that direction, a reassessment of fundamental value that has been a decade overdue, and for the astute observer, this is the moment that separates the crowd from the few, the moment where information becomes the most valuable currency of all, because while everyone else is staring at the number, you now understand the colossal engine of change that is driving it, an engine that has too much momentum and too much global support to simply stall or reverse course now. The train has left the station, and the tracks have been laid all the way to the global financial marketplace. So, where does this leave you, the individual holder of the Iraqi dinar, standing at the precipice of what could be the most significant financial transition of your life, because this is no longer a theoretical discussion or a hopeful prayer but a tangible process that is unfolding in real time, and your actions, or your inaction, in the coming days and weeks will determine your position in a new financial reality that is being coded into existence as we speak. The first and most critical step you must take right now is to become a ghost, a silent observer, to turn off the noise of the forums, the hype from the gurus, the panic from the doubters, and to focus with laser-like precision on the only sources of information that matter, which are the official press releases from the Central Bank of Iraq, the financial wire services like Reuters and Bloomberg, and the official statements from the International Monetary Fund, because any other source at this critical juncture is just background static designed to cloud your judgment and lead you into making an emotional decision rather than a strategic one. Your strategy must be one of disciplined patience, not the passive waiting of the past, but an active, vigilant patience where you are monitoring the foundational pillars we discussed, watching for the next logical step in this sequence, which would be an official announcement from the CBI regarding the removal of the currency auction or a formal statement on the launch of the new digital dinar, which would act as a direct confirmation that this testing phase on the Forex is complete and the full integration is beginning. You must understand that volatility is not your enemy, it is the signature of a market finding its true level. And as this process continues, we will see more of these small movements, both up and down, as the global market digests the new reality of the Iraqi dinar, and your job is not to react to every single flicker but to keep your eyes on the overall direction, which is now unequivocally pointing towards a reassessment of value. Do not be tempted to try and day trade this event. This is not a stock, this is a foundational monetary reset, and the potential upside is so vast that trying to scalp a few percentage points on a minor dip would be like selling a winning lottery ticket for the change in your pocket, a catastrophic error in judgment you would regret for the rest of your life. This is about sovereign wealth, about the recalibration of an entire nation's currency to reflect its true economic standing, and such events do not happen in a smooth, predictable line but in a series of steps, plateaus, and jumps, and we have just witnessed the first, most critical step. Your personal financial blueprint should now be activated, meaning you should have a clear, written plan for what happens at different stages of this process, knowing exactly which financial institutions you will engage with, understanding the tax implications in your country, and having a vetted professional, like a currency exchange specialist or an international tax attorney, already on standby, because when things begin to move